Hello everybody, welcome to this week's edition of Northwest Quadrant Wealth Management e-News. Thanks for joining us. So this e-News is going to sound a little bit like a broken record, but Josh and I think it's important to remind you of the things we're going to talk about today because it's important to the economy and the markets and your money most importantly. We today are in the most narrative-driven market we've ever seen, and the market is picking winners and losers literally on a daily and weekly basis. We've never seen this where a narrative will come out and a whole sector of the market will sell off or rise in value really quickly. And we've never seen it to this extent. And so it's really interesting from our perch to see it. The important thing for you, all of you, is that we are indexers. We have your money in index exchange traded funds. And, you know, that mutes a lot of the noise and having to pick winners and losers in different individual stocks or sectors. We just avoid all that. And so we talked a lot about this last year in 2025, where this market felt a lot like it did in the late 90s, where the tech telecom media bubble grew to such an extent that it eventually burst. But if you had a diversified portfolio in that period, you did really relatively well compared to the overall market like the NASDAQ or just owning the S&P. The similar thing is playing out right now. There are stocks in the market that are down 30, 40, 50, 60% individual stocks, yet the market is essentially flat. The S&P is flat on a year-to-date basis. But then when you look at our asset allocation, where we have some dividend-paying stocks or some small cap or some value stocks, those stocks are doing really well relative to the market, like 1,000 basis point outperformance on a year-to-date basis. And so the point is that asset allocation can be very boring and at times seem like it's not worth it when, you know, U.S. large cap stocks are going straight up. But in markets like we're experiencing right now, asset allocation is paying dividends. And so remember, for most of you out there listening that already have the money, they're already so-called rich, it's about just hitting singles and doubles and avoiding blow-ups. And that's the role we're really playing in your life. And this asset allocation is taking care of that. And so we're really encouraged about the market action that we're seeing and how your portfolios are responding to that on a year-to-date basis. We're really happy about how our asset allocation is doing and the constituents within your portfolio. Josh can talk about why we're going to be optimistic for the rest of 2026 as it relates to the economy.
Well, one of the benefits of this job is you get, especially in Oregon, is you get to meet with a wide range of people across the ideological spectrum. And by virtue of being in Oregon, our client base is pretty split along ideological lines. And the blue team members of our client base now might be feeling pretty dour about the economic data. And ironically, it's of course the complete opposite from 20 months ago. But the truth is both of them are wrong, right? And economic data continues to be strong, even despite the latest GDP data, which a flood of imports depressed GDP. But when you look at the high frequency data, particularly, the economy seems to actually be accelerating. And we just wrapped up earnings season this week with NVIDIA, of course, the largest stock in the world by market capitalization. And surprise, surprise, their earnings were absolutely spectacular. So, there's not a lot of reasons to be negative. And when we see what's happening now, the creative destruction of capitalism is in full force. And as these software businesses plummet 40% in a day based on the newest AI-related tool, this is capitalism in full swing. We are absolutely optimistic about the state of the economy and the broader stock market in general as AI continues to entrench itself. But we sit just as fascinated as everyone else watching investors really scramble for what doesn't have obsolescence, because no one really knows at this point. And as Tyler hammered in that point, indexing is the best answer now. When you fast forward 5 years from now, the future, it always looked obvious, right? But it doesn't in the middle of it, and that's where we sit today.
Yeah, so remember, asset allocation is working. We're really optimistic about how our portfolios are doing in this crazy market. A lot of you probably aren't following it as much as Josh and I do because we're market dorks, but it is a really interesting market. And like I said, we're encouraged about where your money is and where our money is as well. So as always, if you have questions about your situation or your account, give us a call at the office, 800-743-0988, or you can email us, Josh or Tyler, at northwestquadrantwealth.com. We'll see you back here in a couple weeks.